Before you place your next trade, watch this. Hi, I'm Francois du Plessis, market analyst for ATFX Africa, and this is your daily market brief, brought to you by Africa's best Forex broker. The markets are holding steady this morning after the US and China wrapped up 2 days of high-level trade talks in London, agreeing to a framework deal aimed at easing tension over tariffs and export controls. While this framework still needs formal approval, it's a significant step that could shape the next phase of global economic cooperation. Despite the positive headlines, currency and commodity markets are trading carefully. Why? Because all eyes are now on today's US CPI report due later this afternoon. Any sign of sticky inflation could influence the Federal Reserve's next interest rate decision, and that means big moves ahead. So let's take a look. After 2 days of intense negotiations in London, US and Chinese officials have agreed on a draft trade framework, a potential breakthrough in a conflict that has rattled markets for over a year. The agreement focuses on resolving disputes over rare earth exports, chip technology, and tariffs. But it is still requiring formal approval. Investors are cautiously optimistic, but the lack of detailed commitments is keeping risk sentiment in check for now. Gold prices remain volatile but range-bound, trading just below that 3,350. This metal is caught between two opposing forces. On one hand, a slightly stronger dollar and reduced Fed rate cut bets are capping gains. On the other, ongoing geopolitical risk and fiscal concerns in the US are helping gold on the line. Today's CPI release could be the catalyst for a breakthrough. A hotter than expected number may send gold lower towards the next support here around 3,325 or maybe even all the way down to 3,300. But if inflation cools, rate cut expectations will rise, potentially driving gold back up towards, firstly, this resistance level sitting here at 3,350, or even higher to the next one sitting at 3,380. The US CPI report due later this afternoon is arguably the most important data release for the week. With the Fed widely expected to hold rates steady at the next meeting, today's inflation reading will be crucial in shaping market expectations for rate cuts later this year. Traders will be watching for any sign that Trump's tariffs are creeping into consumer prices, which could complicate the Fed's decision making. If you do want to join me for this specific session live, we will be live streaming this release at 2:15 this afternoon. The dollar is slightly firmer against the yen today, with USD JPY trading just above that 145 level. The pair is gaining modest support from optimism surrounding the US and China relations, but also from rising bets that the Fed might hold rates steady next week. On the Japanese side, the Bank of Japan governor has reiterated his willingness to raise interest rates if inflation proves sticky. But so far, underlying price pressure in Japan are still too soft. As a result, the yen continues to underperform. If US inflation surprises to the upside, expect USD JPY to break towards that key resistance area up here at 146. A lower CPI print, on the other hand, could push the pair back down towards the support level, firstly here at 144, or potentially even lower to 139.8. WTI Crude is finding solid support around that $64 a barrel as markets digest news of progress in US-China trade talks, a development that could revive global demand for energy. Adding to this bullish tone, the latest API data showed an unexpected drawdown in US crude inventories, which hints at tighter near-term supply conditions. A positive EIA inventory report today could extend oil's rally towards that $65 a barrel level. However, a surprise build or disappointing follow through on the trade deal could limit gains. Energy traders should also stay alert to inflation-related volatility this week. And that wraps up our daily market brief for today, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa and experience the difference for yourself. Until next time, stay sharp, stay focused, and trade smart.